Right now, something strange is happening in the silver market. Most people still have no idea about it. Traders and analysts are whispering about a possibility that sounds almost unbelievable. Some forecasts suggest silver could surge toward $200 an ounce by 2026. If that happens, it wouldn't just be a price increase. It would expose a hidden crisis inside the global financial system. Many insiders believe the warning signs are already here. The quiet metal may be hiding big secrets. For decades, silver has been treated as a quiet metal. It rarely makes headlines like gold or oil. Analysts are now asking a dangerous question. What if the price people see on their screens isn't the real price? The market may have been quietly distorted for years. Most investors have never seen the forces behind it. Silver is not just for coins or jewelry. It is one of the most important industrial metals today. It is used in solar panels, electric vehicles, smartphones, medical equipment, satellites, and military tech. Silver is one of the best conductors of electricity ever discovered. Modern technology quietly depends on silver. Most people don't realize how critical it is. Global demand for technology is exploding. Governments invest billions into renewable energy infrastructure. Solar power installations are growing rapidly. Electric vehicles expand across the US, Europe, and Asia. Each of these industries consumes silver. Demand keeps rising, but supply struggles to keep up. Silver mining is not simple. Most silver is a byproduct of mining copper, zinc, or lead. Mining companies cannot instantly increase silver supply. They need to expand other mining operations first. When demand rises faster than supply, pressure builds inside the market. This is where things get complicated. Silver is traded not only physically but also through paper contracts. Futures markets represent metals stored in vaults elsewhere. These paper markets are many times larger than the physical supply. Normally, cash settlements prevent issues. Critics argue paper markets may be far larger than the actual silver available. If too many buyers demand physical delivery, the imbalance shows quickly. Market manipulation is also a concern. Banks have faced investigations and fines for spoofing and influencing prices. These incidents confirm that powerful institutions can influence short-term market movements. Some researchers believe suppression may be long-term. Large institutions with short positions can push prices down. Whether intentional or mechanical, silver rallies often stall or reverse. Markets can resist shortages for only so long. Reports show physical silver inventories in vaults are gradually declining. Industrial demand continues to rise. Solar panel and EV production alone consume enormous amounts of silver. A sudden rush for physical silver could reprice the market quickly. Large buyers and concerned investors may shift from paper to physical metal. Early signs are visible. Unusual movements between vaults and long-term supply agreements indicate this. Interest in physical silver ownership has grown in online communities. Experienced traders watch these signals carefully. The controversial forecast number is $200 per ounce. This seems impossible to most, as silver has traded below $30 for years. Commodity markets have produced similar surprises. Supply shortages plus financial panic can drive explosive moves. Silver behaves like gold in uncertainty. It also behaves like an industrial metal tied to technology. Two forces push the price upward simultaneously. Rising industrial demand and investor protection against inflation increase pressure. A hidden crisis could be exposed if paper markets are larger than physical supply. Exchanges might adjust rules, and prices could spike rapidly. This is not guaranteed. Markets are complex, with many moving parts. New mining projects could increase supply. Technological improvements might reduce silver usage in some industries. Economic slowdowns may temporarily reduce demand. Still, structural imbalance keeps analysts alert. Big financial events often start quietly. Small inventory changes and unusual shipments signal deep attention. At Iron Ledger, we explore these hidden stories. We focus on mechanics shaping financial systems, not sensational rumors. Markets often appear calm before major adjustments. Beneath the surface, demand, financial structures, and geopolitical competition build pressure. If pressure breaks, adjustments could be dramatic. Years of quiet structural changes may finally become impossible to ignore. The real question is not just if silver hits $200, it is whether the global financial system underestimated this metal's importance. We'd love to hear your thoughts. Could silver experience a massive price shift, or are predictions exaggerated? Share your opinion in the comments. Conversations grow when different perspectives come together. If you found this investigation useful, share it with someone interested in financial markets or precious metals. These discussions grow awareness of hidden dynamics shaping global finance. Thank you for watching Iron Ledger. Stay curious about the forces quietly moving the world's money.